today's golden rule of the day is have big time frames and smaller trading sizes. So what I mean by this is whenever you trade, always trade the biggest possible time frame that you can. So look at the weeklies, look at the monthlies, but weeklies around where you should be trading. And trading sizes, what I mean by that is always have a small enough trading size which is not more than 2% or 3% of your capital. Never go over 4% or 3%, because that's where you're going into danger territory. So you have more stocks. I would say an average of your portfolio should contain anywhere between 8 to 15 is like the good number. And that should include all different positions of different sectors, and never just allocated to one sector. But the principal rule here is trading big time frames. Go into the weeklies and above, and that'll help you get more consistent profits by avoiding the noise. So I hope this was helpful to you, and stay tuned for another golden rule coming up soon.